Alpesh, you bring up China. I want to talk a little bit about China. I'm reading more and more notes coming out talking about the concern about credit and the fact that they're overdoing it. The stimulus measures obviously are important, but they're very short term, and there's a danger that actually they could end up doing in the medium term more harm than good. Do you subscribe to that, or do you think actually the Chinese are on the right road?
Well, I don't know if you saw the note from the Chinese central bank today. Yes, they've had record levels of new lending. They've said they're going to keep it at appropriate levels.
Yeah, I don't know what that means.
It's probably something to be read between the lines, which is that they're trying to reassure the rest of the world they're not going crazy in either direction. They're not going to try and contract too quickly, and they're not going to try and expand too much. They're watching it carefully, is what they're saying. It's trying to build confidence for the rest of the world that the Chinese economy will continue growing at the rate it's going. I don't have a problem with their rates of growth or with their macroeconomy. Their deficit's about 1.4% at the moment. They can afford to run that when they're running at about a annual GDP growth of about 9% per annum growth. When you put in tax revenues that they're likely to continue getting, that's a healthy economy. Sorry.
No, I think it's a fascinating development for a couple of reasons, but almost away from the Chinese economy, because consumer consumption is actually up about 60% in inflation-adjusted terms in the year. It tells me that they're stoking domestic demand, not foreign demand, because exports are falling. That has big implications for how the U.S. is going to get their treasury auctions off. They've had great success so far, but if the Chinese don't need to, I don't want to say manipulate, if they don't need to control the band of the yuan through treasuries, that's an enormously important aspect with respect to treasury funding. And ultimately, it changes the dynamics of earnings generation outside of the United States for S&P 500 companies. Most of the revenues come from outside the United States anyway. More and more are going to be coming from consumer-led products into China.
What concerns me a little bit about the Chinese, other than, of course, the $2 trillion to $2 trillion of US debt that they own, is the extent to which they're going to diversify. They've threatened they want to diversify longer term. They've even mentioned a new currency. What impact will that have on the dollar? That's the question mark where that overhang remains. One thing's for sure, in the short term, they continue to need a strong US economy for all the reasons you just mentioned, earnings and the demand out of the US. So we continue liking China because of capacity, because of growth, because their companies are performing, because of earnings. We like India even more, and the products that we offer through our funds in India are doing particularly well because the Indian market has all the other benefits of being a democracy, property owning, and a safer bet, basically, for inward FDI investment. So we like it even more than China, but we certainly like China.